Hello, everybody. I'm Chuck Gibson. This is a special report, a Taking Stock special report. Joining me on the phone right now is Art Jarvis from Jarvis Global. And Art, with everything that's been going on the last 2 days, since we had our regular Taking Stock, episode number 47, it's time for a Taking Stock special report. So what is happening?
We've got a whole lot of interesting stuff going on here, especially the last couple of days. The market was down almost 5% yesterday after Trump's tariff announcements after the close of the market on Wednesday. And then at one point we were down almost 5% again this morning because overnight China, Taiwan, and Japan, China announced that they were going to come up with retaliatory tariffs to the tune of, I think, 34%. We got that tic-taciness stuff going on that we kind of talked about a few days ago. But yeah, it's this is not normal market action, and it's generating a whole lot of fear and uncertainty in the markets.
Well, and as you have said many times, maybe too often, fear and uncertainty, they drive the market. But, I know you had I saw a great quote from you. You texted me something earlier, and I wanted you to share that with the listeners right now because it goes back to the conversation we had on Taking Stock, multiple episodes, but most recently on the one Tuesday, Taking Stock 47, about, what's going on with the tariffs and, are we going to have to talk people off the ledge? But you had a great comment about the fear and uncertainty aspect of that.
Yeah, definitely. I'm a big fan of It's a Wonderful Life, definitely during the holidays and things. But one of the quotes from that from George Bailey during what is the run on the banks during the movie is he says, "Potter isn't selling, Potter's buying, and why? Because we're panicking and he's not. That's why he's picking up some bargains." And honestly, that quote is words to live by. It's like people are panicking for a good reason or not for a good reason. And, honestly, we've already pushed this thing this thing being the market to a level that is what I start to call ridiculousness. Because there's a whole lot of uncertainty out there, and people are worried about the tariffs and, and then our economy's slipping into a recession. But, the interesting thing is we've already taken 15 to 17% out of the market, depending on what index you're looking at. So even if we did slip into a recession, you have to ask yourself how much of it is already priced into the markets.
That's a great question. And there's that R word again, and dangerous talk from Art Jarvis this morning. But and you're not saying that this is the forerunner to sliding into a recession, or are you? What?
Well, unfortunately, an answer you hear a lot is it depends. Right, but just because you slip into a recession doesn't mean it's a 2008-2009 scenario, right? We call that the Great Recession, and then in that economy, back in 2007, 8, and 9 was completely diametric to what we're talking about today. I mean, with it, we've got some things going on. We have the pots are being stirred, and a lot of things going on in the world, but we still continue to receive positive economic information. And granted, that information is, kind of a little bit after the fact in some regards. But, even today, we got an employment number that they were looking for 140-something thousand jobs to be created, and ended up being 100,000 more than that. And then you look at the unemployment rate. They were looking for unemployment rate to be 4.1. Well, it moved up slightly to 4.2. Well, 4.1, 4.2 unemployment is basically the natural rate of unemployment in the United States and has been for decades. So, again, it's just things that are going on right now is pure unadulterated fear and concerns or uncertainty about what the future looks like. But the problem is I'll say it again, the market has pretty much, unless something really bad comes down the pike, the market's pretty much already priced a recession into the market, whether it's going to occur or not. And I've been having a lot of phone conversations here over the last few days, and the point is where stocks are on sale. And, maybe not today, maybe not on Monday, but guess what? It's probably a great time to maybe take some more of your more conservative investments and move a little bit up the risk curve, or take some new money and put that money to work. That's why I like that quote from It's a Wonderful Life. It just points out that, people get into panic mode. Well, guess what? When people get into panic mode, that's an opportunity for everybody else. And, I've said it to you before, chaos brings opportunity, and volatility brings profitability. So I stick with that.
Wow. Well, you know what? I was going to say, and we want to wrap up like the special report, but I was going to ask you to, make an argument, for the tariffs that might, bring some calm, and, level off some of the chaos, or take away some of the uncertainty and, bring a convincing argument for the tariffs are working or will work in our favor. You just said the job report came out, and it was $100,000 more jobs than were anticipated. And it's hard this early because tariffs are just being announced and things like that, to make the argument that right there, the proof is in the pudding. More jobs are being created. Part of the tariffs, in terms of the reasoning from President Trump and the Trump administration, is to in fact create more jobs here at home and stop all the things that have been farmed out and buying the goods from other nations at outrageous prices. It kind of makes the argument already with the employment report. Would you agree?
Well, yeah, I think the important part, we always talk about the economic trends. I try not to get too far down in the weeds with a specific number, but, over the last few months, basically the average increase in payrolls has been about 140,000. Well, today we come out with, I think it was up 240-something thousand. So not only did we get a positive number, two, a better than expected number, but we're still continuing that trend of creating jobs in this economy. So number one, we've got that going for us until we don't. But then the other side, you talk about the tariffs. I believe that we're in a place in this country, and we need to adjust. We need I'll use the word reset. We have created almost $37 trillion in debt. I believe that, if you talk about fair trade, which is an interesting comment, but, it's not fair right now. And you know what? It's somewhat short-term pain for long-term gain. And, we need to make some adjustments. Now, the current administration is doing it by just completely ripping the Band-Aid off, right? It's not this slow process where we've dove in with both feet and the whole body, right? So,
right.
But the point is do I believe that, down the road, and I can't give you, it could be shorter term, it could be a little bit more intermediate term, do I think this economy will be better off if we continue down this path and try and make things a little more fair, and maybe we take care of our balance sheet a little bit? Yeah, I do believe that. Or the alternative is we continue to kick the can down the road, and all that means is it's going to be just that much more painful down the road. So we can do it now and experience some pain, or we can wait and experience, and our kids and our grandkids can experience a whole lot more pain. So I can't, again, it's no fun. Let's be clear about that. But I think what's going on, honestly, in some ways is necessary. But I'll say one other thing, and that's, the way we go about it is, we need to maintain some of these relationships that we have with other countries and things like that. So, and I do believe that, what we're seeing sometimes on the outside of the room is also different than what's being said and done on the inside of the room. So I do believe that rational minds will prevail, and that by the end of this, they'll come up with something that everybody can live with, and I do believe that the United States will be a little bit better off because of it.
Well, that's what we're hoping. And so I know you can watch the numbers, even right now while we're speaking. So, you mentioned already this morning, a little bit earlier, after the market decrease was about 5% yesterday. It was in that range already this morning. What are you looking at right now in terms of some of the numbers? Is there, and again, we know it's been a bumpy ride, as you said at the start of 2025. Buckle up, and it's been a bumpy ride daily, not weekly, not monthly, not quarterly, but daily. So what's it looking like right now, Art? What kind of numbers are you seeing as we speak?
Yeah, interestingly enough, in just this short period of time that you and I have been talking, we've gone from a market that was almost down 5% that's down 3%. So, and this happened yesterday, and it'll happen today. But, there are levels where you start seeing the buyers come in, right? So,
sure.
I'm not the only one preaching this. It's like, there are certain levels that investors and traders are looking at, and they're out there picking up bargains also. So yeah, I mean, we're the markets are down, just call it 3%. We're down 3% right now, which translates for the Dow Jones almost exactly 1%, and the S&P's down 163 points, and the Nasdaq's down 3%. That's 520 points. So, yeah, I mean, it's some big numbers, and they're talking about comparing the drop to back in 2020, which from a absolute number standpoint, those are probably fair comparisons. But the interesting thing is here we are 5 years later, the markets are higher. So from a percentage standpoint, the percentage numbers are less than what they were 5 years ago, right? So
absolutely,
1,000 points on the Dow today does not equal 1,000 points on the Dow 5 or 10 years ago.
Right. Well, and for those, when you're listening to this, for all of our listeners, this is, between 11 and 11:30 on Friday morning. By the time the market closes today, it may be back to the level it was yesterday. It may drop a few more, a little bit today and end up down 5% or whatever. But currently, as you mentioned, down 3% for the day. I'm throwing out a thought here, and tell me if I'm wrong as we get ready to wrap up this, special report, Art. Looking for some positives, and that's what I want you to close with ultimately, is some calming words for everybody as we head into the weekend. But that's one of the positives that I feel. This is Friday, so when the market closes today, whatever it does the rest of the day, we're going to have a weekend of, the market's closed. I mean, when the bell rings at 4 o'clock, this afternoon, that's it. And it's closed until Monday. Maybe giving people, you tell me again if I'm right or wrong, giving people a couple of days to step back, take a breath, calm down, and then, get a fresh start on Monday. What do you think? And then again, what are your calming words for everybody as we head into the weekend after a couple of rough days?
I think you're exactly right. I think the nice thing about a weekend or something or a holiday is, you said it exactly right. Take a step back, take a breather. Okay, realize that number one, this is not the end of the world. Okay, and this is not going to wipe out your investments unless if you're down 15%, the only way you lose money is if you sell stuff at a 15% loss, right? So don't, especially now, don't go in and run in and try and sell things. And again, I truly believe, and again, this is almost 40 years of experience. There's been a whole lot of quotation marks end of the world things that have happened in 40 years, right? And guess what? We've made it through it. Okay, and I guess I'll just reiterate that I try to stick with the economics, and from an economic standpoint, there at this moment in time, there are not indicators to indicate that we're getting ready to go into any kind of steep recession or deep recession or anything like that. So, if you, again, I'm not going to delve out investment advice over here. You talk to your investment advisor, but you know what? There are probably opportunities out there. This is not a super bad thing. This is actually probably more of an opportunity than what it feels right now.
Perfect. And and that's the high note that we'll close on. Art Jarvis, listen, thank you so much for your 15 minutes on this special report. And for the listeners, this has been a Taking Stock special report here on Loveland Beacon with Art Jarvis from Jarvis Global Investments. Thanks again, and thank you, listeners.
Thank you. Take care.